Traders, welcome back to our price action trading lesson. We're looking at S&P 500 mini futures. The time frame is 2000 tick chart, which is very similar to our minute chart. In this video, we're going to talk about price action rules, how we can use them to predict directional bias of the market, and where are the high probability setups to enter. So we started with very strong downtrend working lower. We have a small break, push to a new extreme, which is telling us that this bearish push down played out. You have a push above EMA. Now this break was so tiny, I was still thinking, hold on, there can be some significant push to a new extreme, but market reversed so strongly to the upside that I basically consider this break a new extreme tested. And right now my focus is on this bullish push working high. We already have a small break in new high, uptrend played out, but market keeps pushing higher and market keeps pushing higher again. So it looks quite bullish, but everything played out. So I don't really want to take anything just now because, all bullish trends played out. There can be some potential spike in a channel, but nothing is really confirmed, so I need to be a little bit more patient now. Let's see what's going to happen. Market is trending to the upside. So when I'm watching this, this is telling me that the market is more bullish than I initially expected. Okay, I can redraw in hindsight some smaller spike in a channel like this, but market is definitely not reversing. It's looking still quite bullish, but there is no good pattern, nothing in play. I can't really draw any bigger spike in a channel like this because I have so much empty room here. And this is what I have to do as a price action trader. I always look for these channels, but these channels need to be confirmed. And there is an objective way how we draw these channels. So I'm not looking for incorrect channels. So right now I just need more information so I understand what is the market cycle. I don't have enough information, so I'm just waiting. We are trading down. Okay, I'm going to redraw the downtrend. At this point I was really expecting market to reverse, but we are back above EMA. Okay. So once again, no reversal. In fact, this downtrend can't even get the new low tested. Okay, think about this. This push down has a break, but we can't fully test the new extreme. So this is market telling you that the price action is still quite bullish. Okay, we traded up into this and we're already going sideways. So I'm predicting small consolidation, and you can see this is starting to resemble what happened on Monday. We started with the similar structure. We had an uptrend working high that played out. But instead of market reversing down, we had consolidation, and eventually market continued working higher. So when I was watching this live today, because similar structure happened on Monday, I already thought, okay, this can play out very similarly. Of course, you still want to confirm, but this is already something you keep in back of your mind because price action rules work over and over again. These patterns repeat over and over again. They may not repeat day to day, but they repeat overall. We have a second entry long now, but problem is, you're going long at the top of the move, okay? Yes, the resistance is not this significant because this is not super confirmed trend range, but I don't want to go long right at these highs. This is still pretty much structure where it's developing. It's too unclear, so I need to be patient and I need to understand what is going to be the structure. And market broke higher again. Okay, so now it's definitely looking like the structure we had on Monday. Okay, because this is not acting as a trend range. If this was a breaking new high and a consolidation, you would expect trend range to hold and prices going lower. That didn't happen. So when I'm watching this, and I can actually see, I'm going to go a little bit further, the prices are back above EMA. This is important. So now what I'm going to do, I'm going to draw some bigger spike in a channel pattern, something like this. Big spike up into spike in a channel pattern. Okay, and this fits pretty well. So right now, I finally am getting the clear structure. I'm finally getting some clear picture what exactly is happening in the market. And now I'm only thinking about long opportunities. We have a high low, but I can't go long above bearish bar. So it's a horrible bar. Double bar entry feels a little bit too big at the top of the move. So I can't really take it. Market is correcting. You have pullback and you have second entry long, which basically can be viewed as high low from these lows. New high, first entry long, second entry long. And we have breakout pullback pattern. This kilo is coming into play, and we have one leg down, pullback, second leg down. So this is a little bit difficult structure to navigate because you have to be patient throughout this area. There is no real easy way to enter, but it's okay. As a price action trader, you don't have to take setup every 10 minutes. Okay, you want to take a high probability setup, which means everything aligned. You understand what is the context. The key entry point is confirmed. You're not guessing. You have confirmed key entry point, and then you have the pattern that's going to confirm your context and key entry point. Is exactly what we have here. You have a second entry long, or I can basically view it as high low. You have broad two legs down, double bottom, great signal bar, and this is good confirmation that a brand new push phase is about to start, and this is truly Great high probability setup. This is exactly what we were looking for because everything aligned, uptrend got confirmed, even the support, and we're back above the EMA. I'm going to redraw a downtrend. So now the bias is bullish. So I'm resetting the count at each new high, and I want to consider another second entry long. That's a high probability setup. Second entry long at the key entry point. So I was ready to go long here, already preparing my order, but it never triggered. Okay, you can see there is no break above this bullish bar high, so there is no entry. You have to wait for signal bar to get a break above its own high. It doesn't have to trigger above previous bar. The signal bar itself needs to get a break above its own high. So there is no entry. Second entry long actually from here, but once again, you have to use double bar entry. They're still at the top. It's quite stacked at this point, so I didn't like it. And it's not as great because it's too stacked and it's quite big as well. You want to enter here, but not here. You still made the scalp though, but not the greatest. The market corrected, break, push to new extreme. So if you studied the Monday chart lesson, you already know what to expect. Broad play get pulled back down, market moves in pairs of twos. So I want to see what? I want to see this, high low above EMA. I want to see high low confirmation set above EMA, and there is no high low, no nothing. So just significant push, it's working hard, I can't really take it. Okay, and now we have overshoot of the trend channel line. We have another second entry long here, which was quite tempting. You know, you can consider, because also when you're watching this live, you can draw a little bit steeper channel that has no overshoot, but it's not full at the EMA. Downtrend break, push to new extreme, but it's a little bit too aggressive, especially since you have quite overextended push face, potential overshoot. You have another second entry long, but problem is, I have some short-term downtrend working lower, because you have a one leg break, second leg, count reset, and I have one leg working lower, the downtrend is still in play. So we cannot take this, we broke below EMA. Why we broke below EMA? We're coming off the range highs. I mean, this was quite tricky trade because you can view it. Promise, it wasn't really fully fell breakout. It's still hovering around this. If you went long here, not that big of a deal. I can actually mark it's not a horrible setup to consider, but if you're gonna zoom back, you can see this push face is way too overextended, and market struggled to break higher many times here. And especially if I don't have broad two legs and EMA is not holding, I was looking for high low, that never formed. But if you took a losing trade here, not that big of a deal. Trading is about taking a chance. Okay, I actually like now drawing this channel because it fits much better. This one is just super broad. If I'm going to use channel like this is just, yeah, this is definitely not how to draw a channel. Okay, because there is a rule that we draw against the main trend, which is bullish, corrections tighter, and with trend secondary channels we can draw wider. So you can see we're always trying to draw these corrections tighter. I'm not drawing correction like this or correction like this because I want to see the tight corrections to like a pullback. This is too broad, so much empty room here, so much empty room here. You can see this is consolidation, and this is really the area where the bottom dropped. So I like viewing it as a downtrend breaking low, downtrend breaking extreme. Okay, now what are we expecting? This uptrend needs to get high. You already know what to expect. Same thing happened on Monday. So I want to see second entry short failure above EMA. Okay, the context is clear. There was no second entry short here. I'm gonna count from the lowest point. First entry short, pull back, no break below once again, so no second entry short. I'm gonna redraw the short term uptrend working higher, and now I have it. New low, first entry short, pull back, second entry short failure. This right here is a felt second entry short at the EMA. You have to use double bar entry, but this secondary bar is very close to the previous bar. It's basically at the same level. So this is great high probability setup because the context is super clear, super predictable. Downtrend played out, you're above EMA, uptrend is new high. There is no conflicting variable. This is a perfect high probability setup because once again, you're catching the beginning of the push phase following the rules. No good high low, and no good second entry low. Market just continues to go higher. Can make this a little bit wider, but our main channel now just played out. Okay, you can see we have new high, so I'm pausing looking to go long. This is significant push up. I have a second entry long, but I have to skip it. I have to skip it because the main channel just played out. Yes, the secondary channel may get new high, but you need some more confirmation. The main channel just played out. It worked in hindsight, but you know, we can't cherry pick. We have to follow the rules. Okay, when you're watching this live, it's not as super clear, and you have to have strict rules that you obey. They're gonna help you to find an edge. So it was tempting setup, but I don't think we can take it. And I felt second entry short, unfortunately, closed way too far up, so not really good entry. And market keeps going higher again, so it looks like there's some bigger channel, because why do we keep trading higher so strongly? So I can just widen it a little bit like this, for example. You have to be perfect, you can be close. Once again, potential overshoot, so you can enjoy the potential overshoot. You have some decent setup here, but it's hard to know exactly if you have overshoot or not. Okay, yes, you have now confirmation that the initial channel has to be wider, because why after new high you have such a significant push up? But you have overshoot, new high, what is this? First entry long, second entry long, third entry long, fourth entry long. You know, very tempting. Locally, you can tell this is going to work because you're above EMA. You can see the difference from here to here. Here you broke below EMA with a massive bearish spike. This is indicating that the market is going to roll over. You can see market is rolling over, massive bear bar below EMA. That's indicating that the market is going to roll over. Here is different. Here you have price action going sideways and EMA keeps holding every single time. So you can tell that this is not going to roll over. It broke lower, reversed up. You know, more aggressive trader can consider because local is such a perfect setup. But some triple test, double bottom, but a little bit more aggressive given the overshoot. And now you definitely have overshoot, so you have to be careful. Okay, market is completely reversing down, so I have to right now draw brand new downtrend like this. Okay, what do you do in a situation like this? Okay, what do we do in a situation like this? This is area where we have conflicting variables. And what are those conflicting variables? Number one, we have bigger channel that may need to get new high, but at the same time we had overshoot. And that can generate stronger pullback in the opposite direction. And we have downtrend play. So which structure is going to work? It's hard to tell because you have so many conflicting variables. Yes, the main bias is bullish and generally you expect new high, but also you had overshoot. So that can reverse the market. So especially if the downtrend is in play, I need to be super careful. I need to be super careful now because remember, we don't want to be guessing. The reason why these setups here and here are such a high probability setups because everything aligned, everything is confirmed, you're back above EMA, no downtrend in play. Everything makes sense to predict a brand new push phase. Here, the downtrend can be valid. At the same time, I cannot go short because we traded up the whole day. So this is just waiting area. I can't go short because we traded up, can't go long. Okay, waiting here. It's time to let the downtrend is confirmed and it's really looking like, okay, this is significant push down. So the downtrend is confirmed now. It's really looking like a strong downtrend. We expect right now to go short because you have so many pushes lower, so many EMA rejections. Redraw the uptrend. You have a second entry long, which looks great locally. This looks great locally, but what about this downtrend? You cannot deny that this downtrend is confirmed. There is no break in new extreme, nothing. So remember, we are not pattern traders. Context is important. It was a tricky area because locally it looks so tempting, but this downtrend simply doesn't have a break. A new extreme, it simply looks too clean, like it's in play. So once again, conflicting variables. I can't stress it enough how important it is. When you have such a clean downtrend, you can't really go long. Whether there's going to be a new low retest, and you actually have now lower high confirmation setup of the failed second entry long, which can be considered because now it's safe to assume that the downtrend is gonna get the new low tested. Almost new low, not really. We're back above EMA. Why the prices are too bullish? I don't think we can sell too much of a congestion, and market is back above the EMA and the market is about to close. So this is the overall structure for today. Very similar to what we had on Monday. Uptrend working higher. Couple decent setups. You have to be patient throughout this area where basically it still looks bullish, but nothing has been established. No good pattern. You can only take a trade once you understand what is the pattern. And if you can see market working higher but you don't have confirmed channel, you have to be careful, and then you can see broad two legs down and a high low. So yeah, quite a decent day. It's a shame these two setups right here, this one and here, they were a little bit ambiguous because first you have a break in your high and then you have potential overshoot like this. So, you know, a little bit more aggressive, but overall decent setup. So I hope you had a good trading. I'm going to wrap it up. I'm going to talk to you next time. Good luck in your trading.